Hi, my name's Christian Waldegrave, Market Analyst at Teekay, and this is our offshore market update for the second quarter of 2012. Now, one of the biggest factors on offshore development is oil prices. Obviously, offshore development takes a lot of money to develop the fields, and what we've seen in recent months is a bit of volatility in oil prices, so I thought I'd give a bit of colour as to what's happened with oil prices and how we see that developing going forward and how that's going to affect offshore field development. Through the first quarter of this year, oil prices were pretty high. Brent crude was around $125 per barrel through to March 2012. And then since then, what we've seen is a slowdown in the global economy and a slowdown in oil demand as well. And that usually translates into lower oil prices. And in fact, during the second quarter, Brent oil prices did dip, but the lowest they went was about $90 per barrel. And they've since come back up to $110 per barrel. And that's because of some supply-side disruptions in terms of we've seen lower production from Iran, some non-OPEC supply outages and that kind of thing. So at these kind of prices, they still fully support offshore field developments and FPSO developments in particular. And we think that there isn't much chance of oil prices going back down below the level that is needed to really develop a lot of these fields, which is around $70 per barrel. I think the only thing that would cause oil prices to dip down that low might be a large-scale global recession such as we saw in 2008 or 2009. We don't think that that's going to happen. The global economy is slowing, but we do think that oil prices will stay supported at the level which is going to drive offshore field production. Another thing that we can look at in terms of a long-term lead indicator into FPSO requirement and therefore shuttle tanker requirement is what's going on in the drilling sector. And fleet utilization in the drilling sector and day rates in the drilling sector are very, very high. In fact, the deepwater drilling segment is almost 100% utilized. And we've seen a lot of orders as well for deepwater drilling units. In fact, when all the units that are on order deliver, the deepwater drilling rig count is going to increase by about 18%. And so all of those rigs are in areas of deep water such as offshore Brazil, West Africa and other parts of the world, trying to find new sources of oil. And that's going to then translate in years to come into demand for FPSOs and by extension also demand for shuttle tankers. So the long-term outlook, we think, for offshore production and FPSO requirement and shuttle requirement is still very strong. And in the shorter term, we do expect to still see more projects in our core areas, which is the North Sea, where there's a lot of exploration work being done, both by some of the bigger oil majors, but also by some smaller independent companies there. And there are several FPSO and shuttle tanker projects in the pipeline there. And also in Brazil as well, we see Petrobras is pressing ahead with its plans to develop its offshore sector and to bring new production online. So we see very good forward requirement for FPSOs and shuttle tankers, both in the short term and in the long term. So that's our update for the offshore market in Q2, and join us again next quarter for another update.